Hello everyone, you're welcome back to my YouTube channel. Today we are going to be discussing how to record depreciation. How to record depreciation. So first of all, we go to chart of account so that we'll create a fixed asset account. So how do we go to chart of account? So go to company and select chart of account or click on Ctrl A. So let's click on that. So these are the chart of accounts, like a trial balance. So we have a few fixed assets here. We have furniture and fitting, we have tractors, and furniture and equipment, tractors. So I'm going to be doing furniture and fitting. So I assume we are creating a fixed asset for the first time. You understand? So we are creating a fixed asset for the first time. So come to account here and you click on new or Ctrl N. So click on new. Okay. Then we'll select fixed asset account. Then we continue. Okay. Okay. Now the name is furniture and fittings. So this is going to be my fixed asset account. So I want to make this as a parent account. So I'm not inserting any figure or any opening balance. So we save and new because I want to continue here. So now I'm going to create a sub account. I'm going to create two sub accounts, one to monitor the cost and one for the depreciation, the accumulated depreciation. So I'm going to create furniture and fitting costs. So now there are two things involved here. Number one is either you are using QuickBooks for the first time and you want to record this furniture and fitting. It already has a cost. You're already using it in your business. So you just want to factor it into the QuickBooks. So it means you have it already and it has a value. It has an original value. It has an original value. So let's say the original value that it was purchased. Let's say it was purchased since this is 2022. So let's say it was purchased since 2020. You understand? So if it is purchased since 2020, it means we are going to use the initial purchase price, the cost. So it is a sub account of furniture and fittings. You have to make it a sub account. Remember, when we are creating furniture and fitting, we do not add any value at the opening balance. But in this case now, we are going to add value at the opening balance. So we are entering. So you are going to enter the initial value. So let's say this furniture and fitting initially, as at when you purchase them, they cost 250,000. Then you put the date as of. So remember we said okay, let's use January 2021, 2022 as at first. Let's use 1st of January 2022. So we'll click on OK. That is for the opening. Then we save and new because we want to continue this transaction. So the QuickBooks is trying to tell me there's a setting under edit that if the transaction is more than 30 days, they should warn us. So but we can still continue. You understand? And why they are bringing this warning is because they are assuming that we've already closed the account. So but we can still go ahead and record the transaction. It will just inform us. Now the second sub account we are going to create is furniture and fitting accumulated depreciation. So from January to date. So I assuming there is a depreciation already. So we are assuming the amount for that depreciation is 10,000. The accumulated depreciation from January to date. So definitely your depreciation, there is a formula, or your accountant will definitely give you the rates at which any furniture or fitting or any fixed asset is to be depreciated. So you handle that matter with your accountant. You understand? So let's say it's 10,000. So we are going to make it sub account of that same furniture and fitting. So we enter balance of 10,000 like this. So the opening balance is 10,000. Now remember, it has to be negative. It has to be negative because it is depreciation. So we select today's date. Then we'll click on OK. Then we'll save and close. Now once you save and close, you see that the furniture and fitting, the cost was 250,000. Now the depreciation, the accumulated depreciation to date is 10,000. Now you can see furniture and fitting is showing 240,000. Let's now say it is time for us to enter depreciation for the year. So I'm just giving this example so that we can understand how to enter the transaction. So we are entering this as a past record. We already have this furniture and fitting. We just want to enter them into QuickBooks, and remember they have a cost, so we are not just buying them for the first time. So the second option is if you are buying it for the first time, all these things I'm creating are going to be 0, 0, 0. My furniture and fitting, definitely it was 0 before. When I was creating it was initially 0. Then furniture and fitting cost, it was in this place and I put 250, so I'm going to put 0. Accumulated depreciation 0, so everything will be 0, 0, 0 because I have not bought them yet. So I'm still planning on buying them. So but I'm creating the account down so that whenever the transaction come, I will now create a register or make payment through check and select the furniture and fitting. You understand? So now let's continue. Now I want to record depreciation for the year. So this is for our training purposes. So you click on the depreciation, you double click on it. So once you double click on it, you create an account. So let's go back to chart of account. You can come back to open window, select chart of account. We are going to create an expense account to track our expenses. So you click on this button here, click on new, this time around an expense account, then you continue. Then under the account name, you now record depreciation. So this one is depreciation, is on its own under expenses. So you save and close. Okay, the name already exists. Okay, so let me use another name. I just want to show us how to create it. So I use full stop there, save and close. So now, okay, if you look at the account, there is there. So I can still use this one. Let me double click and see if there's any transaction inside. There is no transaction, so I can still use it. So I was just trying to create it. I will see how we created that. So I'm going to delete this one now. Okay, deleted. So I'm using this one. So let's go back to the furniture and fitting accumulated depreciation. How do we get here? Let's go back to chart of account. So we go back to furniture and fitting fixed asset, which is this. We click on this account, we double click on it to open a register. So you now select the account. Here you select depreciation as expenses. Now how much is the depreciation now for the year? Let's say it's 50,000. Remember, it's just for calculation purpose. Okay, you can include memo to show the rates. Then you can put a reference number. So then you record. So once you record it, now you see we have minus 60. It means this 50,000 has added to the depreciation. So then you go back to chart of account to see the balance. Now you can see now is 60,000. So 250 minus 60,000. Now the net value of our asset, you can name this as net value, NPV. You can name this as net present value is 190,000. Then how do you trace the depreciation? How do you now trace? Then you go to depreciation account, you double click to generate a report. So you see this is the report for the depreciation on this day, 50,000. So everything is correct. So that's how to record. So we'll go to report, go to company and financial. You can select balance sheet standard to also see the impact of that transaction. So you can see 250 as the cost, 60,000 as the accumulated depreciation, then 190,000 as the net present value, or value the net value. So you can double click on this 60,000 to see what made up the 60,000. You can see there is 10,000 and there is 50,000. So hope you guys understand. If you have any question, please comment on the comment section, ask your question. Don't forget to turn on your notification and click the like button so that you get notified whenever there is a new video. Thanks and bye.